Well, the bulls ended 2021 in style. What a day it was, and what a year it was for the markets. Fourth consecutive year of an up move. The Nifty ended up over 20%, and the bulls decided that no, we're not going to end the year without a big party. Hello and welcome to Taking Stock. This is the last Taking Stock of the calendar year, a year that has been a roller coaster ride on the health front, but on the wealth front, things have been pretty good. Joining me is my co-anchor Reema Tendulkar. Reema, hi.
Absolutely. What a year it's been, right? Healthy gains all around the frontline indices. The Nifty gained close to about 25%. The Sensex ended with 22% despite all those fears around COVID-19. To decode the trading action on Dalal Street today, we will be joined by Mihir Vora, Director and CIO at Max Life Insurance. Also, to get a better understanding of the market technicals for the next few weeks, we will be joined by Jay Bala of Cash the Chaos. We also bring you market opinion from the likes of Gautam Shah of Goldilocks Premium Research, Rahul Arora of Nirmal Bang Institutional Equities, and Harsha Upadhyay of Kotak Mutual Fund. But before all that, Sonia, as you said, right, last day of the calendar year, the bulls decided to party. So after 2 days of sideways movement, on Friday, we saw big gains.
Absolutely. And you know what? Not just the bulls that have gone to party, Reema. I think apart from you and me, everyone has sort of, taken some time off and started their New Year celebrations. But yes, this time it is subdued given what's happening with the COVID situation. But be that as it may, I mean, COVID or no COVID, right? It's been a fabulous year for the equity markets. I mean, the Nifty is up over 20% this year, as we were saying. The mid-cap index has given a return of 46% this year. So it's been nothing but spectacular in the broader markets. And there has been, a lot of dichotomy in different sectors. So, for example, in the auto sector, the biggest gainer on the Nifty was Tata Motors and the biggest loser on the Nifty was Hero MotoCorp. So, in that sense, if you picked the right stock, you did well. Otherwise, you would have lost a lot of money. And it was also a year of IPOs, right? We saw so much money being raised in the market. We had some fabulous IPOs, the likes of Supriya, Life Sciences, etc. So all in all put together, Reema, I think the bulls will be happy with a year like this, but what comes next is the big question, right?
And I think a lot hinges on the way COVID plays out, right? We've seen COVID cases continue to rise day on day, and so many states are putting in restrictions. Do these restrictions amplify? Up until now, many states have put it, at least in the first fortnight of January. The economic data to track will be the advanced GDP estimate, which will come out on 7th of January. And then soon after, we will be talking about the earnings season. So Infosys and TCS both will come out on the same day, on the 12th of January, and that will kickstart the earnings season. And then, of course, there will be a lot about the pre-budget news flow, and then in the run-up to the budget. And finally, keep your eye on the kind of flows. The FIs in the last 3 months itself have sold more than 1 lakh crore in the cash market. So that is a big sell figure. And we will, of course, on the global front, be talking about, the Fed tightening and what happens in 2022 with respect to the number of rate hikes. But let's pose these questions to an expert. Mihir Vora, Director and CIO at Max Life Insurance, is now with us. Mihir, it's great to have you with us on the last day of, this year. Do you think in FY22 there are going to be more headwinds for the equity market?
Hi, good afternoon, Reema, and wish you and Sonia and all the viewers a very happy 22 in advance. Have a great time tonight. So yeah, I mean, like tonight's party, hopefully, we had a wonderful 2021, and the last 3 months have been really, surprising in a pleasant way, because we've seen a lot of selling by FIIs, but the local, institutional, as well as retail support to the market has ensured that we don't go down, in spite of continuous selling by the FIIs. So I think the local retail sentiment seems to be very strong, and it is with this positive sentiment that we are going into 22. So, barring unforeseen Omicron, kind of instances, hopefully so far the data is, not so great in terms of number of cases. But if you look at cities like Bombay, Delhi, while the cases are going up, the hospitalizations and the mortality seems to be under control. So if touchwood this passes, with a spike, but not much strain on the hospital system, then we should go back to the opening trade, and we hope that the domestic economy now outperforms the rest of the world. So that's the theme that we are going in for in 2022.
Okay, Mihir, hi. Happy New Year to you. And you said like tonight's party, everything is going to be fine in the market as well. What party are you talking about? I mean, there are curbs, restrictions everywhere. There's a curfew in the city post 9. I don't think there's any party happening anywhere except in your own home, right? But I mean, jokes apart, this has been a year where there have been lots of hits, but lots of misses as well. In 2022, what are the big hits that you are expecting? What's the big trend and which are the top sectors that you'd be bullish on?
As we ended 2021, one little bit of surprise in a not so great way was the underperformance of the banking sector in the last few months. Now, I mean, considering that we were playing and we are playing for a domestic recovery with consumption coming back and private sector capex, real estate doing well, etc. One was expecting the banking sector should lead the way, which has underperformed. So my guess is that given the relative underperformance, the banking sector should kind of come back in 2022. But the broad theme, as I mentioned, is that we've had a great global run. US markets actually have done better than the Indian markets by a few percentage points this year, while Indian markets have done well. The US market has done even better. And that's simply because they did more fiscal stimulus, they did more monetary stimulus, liquidity, etc. But now that the Indian consumer is hopefully coming back, Indian private sector capex and infra spending, going great guns, and interest rates continue to remain sanguine, one will now expect the domestic demand-led sectors to drive that, and that includes consumer discretionary, banking, the building materials, real estate, infra, cap goods, with the PLI and capex happening. So the broad theme has to be now, the domestic cyclicals are performing. Otherwise, it's going to be difficult for the markets to give super returns unless the domestic capex and the domestic consumption, especially the discretionary theme like auto, etc., does well. So that's one bet that we would like to take this year.
What about pharmaceutical, Mihir? If perhaps Omicron is the end of the pandemic and the beginning of an endemic, and as you said, that if we manage to get past these next few months without a lot of strain on the hospitals as well as on the diagnostic companies, then perhaps the situation will be a lot better. But from an equity market point of view, that doesn't spell great news for revenues coming in for the pharmaceutical sector. So where would you stand on pharma for FY22?
So pharma, while tactically speaking, yes, one would expect action around Omicron, but we have seen in the last year, especially in 2021, that even in the Delta wave, while pharma did outperform, but it came back. So I think we'll have to look at it company by company. The good thing is that not only this year, but even in the last 4-5 years, we had a lot of issues with the FDA, and last year there was hope that with the FDA inspections coming through, a lot of these facilities which were under observation, etc., would come back. But I think the COVID wave delayed that. But now we are seeing that companies are launching new products. FDA approvals should come through. So to that extent, it should be business as usual. And given the last 4 to 5 years of underperformance and the China Plus One initiative that a lot of companies want to do, I would bet on the API companies and even the generic companies.
Okay, since we're talking about pharma, it was a pretty hectic week. There was lots of action in the pharmaceutical space. And Ekta, my colleague, is here to give us the latest on that. Ekta, over to you.
Well, yes, it is an outperformance for the Nifty Pharma as well as the BSE Healthcare Index this week. The Nifty is up around 2% We have the Nifty Pharma, which is up over 5% along with the BSE Healthcare Index as well. Now, overall, the indices have seen fresh buying as COVID-19 cases have spiked. And there is a likelihood that testing is going to increase for diagnostic companies as well as hospital labs. Separately, hospitals in focus on a possible increase in vaccinations of the second dose as well as the booster dose. But however, just watch out for the hospitalization rate, as that is still likely to be low with the Omicron variant, and hence maybe there is bullishness that the non-COVID hospitalizations will probably not get impacted. Pharma companies have also been in focus this week because Merck or MSD India's molnupiravir drug has been approved and launched in India. So the likes of Dr. Reddy's, Cipla, Sun Pharma, all of them have been in focus on account of that. And separately, the likes of Divi's and Laurus Labs as well, which are hopeful candidates in terms of API manufacturing for it. Also, there is a hope that there could be further licensing agreements on other key drugs such as Pfizer's Paxlovid drug for COVID-19 as well. Overall, defensive buying in the pharmaceutical space on account of uncertainty with regards to COVID-19 as well. While Pharma has outperformed this week, just to mention on a year-to-date basis, the Pharma index is up around 10% BSE Healthcare Index up 20% as compared to the Nifty, which is up 24%.
Okay, thanks a lot for that, Ekta. So that's what happened in the pharmaceutical space. Mihir, I wanted to talk a little bit, since we already spoke about Pharma, I wanted to move on and talk a little bit about the new listings because it's been such a frenzy, right? Everything from Supriya Life Sciences, Latent View, Map My India, Data Patterns, everything has done really well so far. Any of these themes or new listings that you still like despite the run-up that we've seen from a long-term investor view?
So definitely these are all very good business models. Structural secular growth segments. Of course, there are too many sub-segments that we are looking at. One is a mapping company, another is a life science company. Then we have the fintechs and the insurance sellers. So it's not one theme that we are playing. It's a lot of segments and sub-segments. So the key is basically to stick to the leaders typically because it's typically these are winner takes all segments. So stick to the winners and ultimately try to make sure that you have a hang of some cash flow visibility in the future, sizing up the market size, etc. So we are really picky and choosy. We have not applied to all the IPOs because the ones which we like are typically oversubscribed, so you don't get too much allocation. So the idea is basically to identify the ones which are attractive even after listing. That's the approach that we are taking. But very interesting business models, I must say. And it's opening up a whole new area of economic activity for the country, for the consumer. And the more success we get in these IPOs, the more venture capital and private equity money will flow into the country. We have seen record inflows this year, and that's creating a positive spin, a positive cycle, a virtuous cycle, so to say, as far as innovation and disruption in the country is concerned. So I think it's great news for everybody.
Mihir, I want to get back to the big picture. What is the investor view on India versus China? This year, the Nifty is up 24%, while the Shanghai index is up about 6.5%. So in that sense, China's valuations are relatively more attractive. So what are investors thinking when they have to make that broad geographical call?
Rima, China has not made money for investors. If you see my tweets, in fact, I just tweeted about it today only. China has not made money for investors. It's a very, on paper, it's a very big market, but ultimately there are such strict rules around FDI. You have to partner with locals. Government can come and take your business away every time. So for the foreign investor, there's not much that has been made in China, frankly speaking. And India is the only option of size available in the world. And it's reflecting the China plus one thing is real. And the kind of money that we've seen in the VCP space in India in 2021, is clearly an indication that after this coronavirus episode, people are looking at, alternate supply chains. People are wanting to politically de-risk China. And gradually, you can fool some of the people some of the time. But if in the long term, 10, 15, 20 years, people have not made money in Chinese stocks, then what's the other option?
Yeah, okay, absolutely. All right, Mihir, before we let you go, this is the last day of the year, right? So there's so much to look back on, there's so much to ponder over. What is the biggest lesson for you from a market standpoint, from a life view, any big lesson that you'd want to pass on to the average investor watching you right now?
So absolutely, as I said, India is one of the few markets which makes money for foreign investors. We are completely open, and it pays to be long-term bullish on India. That's one. And second is that don't get attracted only by the business model. Ultimately, valuations also do matter. So we've had exciting companies but with the wrong valuations, and we've had boring companies with the right valuations, both making you money. So I think sticking to the long-term India growth story and paying a in paying, adequate, not maybe complete focus on valuations, but paying adequate focus on valuations will give you good returns as far as Indian investing is concerned.
Okay, keep the faith in the Indian equity markets, and apart from looking at business prospects, keep the valuations in mind. That is a very sensible advice. Mihir, thank you very much for that. Before we let you go, I want to slip in a quick question about the IT sector. You said the big theme that you're going to be betting on is the domestic economy. So that in a way excludes the IT sector. What is the reason for that? Okay, we'll try and reconnect with Mihir Vora, but that's the view coming in from Max Life Insurance. The big theme they're betting on are the domestic domestic economy facing sectors like financials. So that's what they will be watching out for. Okay, Mihir, we've got you back with us. I wanted to understand your thoughts on IT. Why isn't making it to the top sector in 2022?
Oh, so don't get me wrong. We do like IT. The order books look good. US businesses are doing well, so export orders, etc., are going to flow in. It's just that the sector has done quite well compared to the market almost for 18 months now. And to that extent, a lot of the good news may already be in the price. So while we are overweight, significantly overweight till a few months back, probably will be more neutral, not negative, more neutral. And then that overweight which we reduced in the IT has been moved, or it will be moved to the domestic sector. So, but we still like the growth prospects, no doubt about that.
I guess therein comes the valuation point that you were talking about. Mihir, it's always a pleasure speaking with you. Thank you very much, and have a healthy and prosperous 2022. We need to slip into a very short break on that note. On the other side, we will be joined by Jay Bala of Cash the Chaos with the market technicals for the coming week. But as we go into a break, we leave you with some of the big market voices that we had with us this week. Stay tuned.
From a level of nearly 42,000, the Bank Nifty was down almost 8,000 points. So that's a large fall by all standards. And if you actually look at the pre-COVID levels in late 2019, the high that the Bank Nifty had hit was about 32,500. And where the levels that we were trading at on the Bank Nifty was 34,000. So actually in 2 years, the Bank Nifty hasn't done anything substantial. But now there are concrete indications on the charts that possibly the worst could be over.
We are continuing to be positive. I think our preference would be more towards names like HCL Technologies and Tech Mahindra. Obviously, there is a valuation comfort in both of these names, but we think that from an earnings perspective, these two companies will outperform TCS and Infosys in the large cap space. My sense is that from a portfolio allocation standpoint, it's possible that while FY22 IT could be one of the leaders of the market, my sense is it will be probably more tilted towards large cap IT than it would be towards mid cap IT.
I think home improvement and real estate is another theme which has revived after a gap of maybe 10-12 years. And we believe that we are at the nascent stage here. And over the next few years, again, this thing becomes even stronger.
It's a very defensive sector. If you look at some of the other defensive sectors, today technology is priced for growth. And FMCG has always been priced for growth, even if it doesn't deliver growth. So always, if you look at the defensive brigade, I think both pharma and utilities are the two sectors which look very reasonably valued at this point of time in the defensive brigade.
नमस्कार। कोरोना का एक नया वायरस आया है, ओमिक्रॉन। ये बहुत तेज़ी से फैलता है। आपका बेटा, आपका भाई होने के नाते मुझे आपकी सेहत और आपकी ज़िंदगी की बहुत फिक्र है। हाथ जोड़ के आपसे विनती है, घर से कम बाहर निकलें, हमेशा मास्क पहन के रखें। मास्क बहुत ज़रूरी है और मास्क को सही तरीके से लगाएं। सोशल डिस्टेंसिंग का पालन ज़रूर करें और बार साबुन से हाथ धोते रहें। अभी तक जिन्होंने कोरोना वैक्सीन नहीं ली, वो कोरोना वैक्सीन भी ज़रूर ले लें। हम 2 करोड़ दिल्ली वासियों ने जैसे पहले कोरोना का मुकाबला किया था, वैसे इस बार हम सब मिलके ओमिक्रॉन को भी हराएंगे। आपकी सलामती के लिए जो भी ज़रूरी कदम है हम उठाएंगे। हमें अगर कुछ रेस्ट्रिक्शंस लगाने पड़ें तो प्लीज़ उनका पालन ज़रूर करना। वो केवल आपकी सेहत और सलामती के लिए हैं। हमेशा की तरह इस बार भी मुझे आपका साथ चाहिए। हर दिल्ली वासी अगर नियमों का पालन करेगा तो इस बार भी कोरोना जरूर हारेगा। जय हिंद।
What is money? How much money should a nation create? Who benefits from too much money? And who benefits from too little? How much should money cost? Who should allocate money? And on what values? Every week, we seek answers to these questions with the best minds. Indianomics, the show that questions the politics of economics at these times. This is CNBC-TV18 Newsroom, powered by Ebix Cash.
Welcome back. You're watching Taking Stock on CNBC TV18. We wrap up the year 2021, one in which the Nifty and the Sensex have given you returns of 20 to 24%. The mid-cap index has gained close to about 45%. But it's time to look ahead and prepare you for the coming weeks. We're now joined by Jay Bala of cashthechaos.com with his views on the market technicals. Jay, season's greetings to you. Wish you a very happy and a prosperous next year. What did you make of the markets this week, and what is the setup looking like?
Yeah, thank you. Wish you guys the same. See, the markets are now undergoing a short-term bounce to the correction that started in October from 18604. When I'm viewing this as a counter-trend bounce to somewhere close to 17700, maybe a little bit higher, and what we have possibly seen till 16412 is possibly the first phase of correction. Now, I would think, going into 2022, I would say the first half is going to be part of a large correction, and the second half is going to be a resurgence of the secular bull market. So what we're going to probably see, or what I've been projecting for the last couple of weeks, is a correction to the entire bull run that started at the pandemic lows.
Okay, a correction to the bull run. Jay, thanks for being with us on the show. So, elaborate that point further. I mean, how lower do you think the market could go? And on the Nifty itself, what are the markers that you're looking at now?
Yeah, let's see. There are small, possibilities that this market could first go to a record high. I would give that about 20% probability. But my preferred scenario is just that the market has already put in an important top at 18604, and the correction could last somewhere close to 15500. But if the market were to take out 17900, I'll have to revise this thesis and flip back and say, first it's going to go to the record high and then come back. But it doesn't change the fact the first half of 2022 is going to see a severe correction, and I'm looking at levels close to somewhere about 14400 for the Nifty. And so for the banking index is the weakest one. That's actually come down in a trending fashion. And if you look at the global markets, even though the S&P and Dow are making record highs, if you look at the broader Russell 2000, it's in a very firm downtrend. So this is just the front line which are doing the job, but the broader market is caving in a bit.
So Jay, what are the key levels on the Nifty Bank, and any individual trades in the financial space?
Yeah, the recent low, the banking index, which clocked this week, I think that's going to hold for probably a couple of weeks. I'm expecting banking index to bounce to somewhere close to 37K, maybe slightly higher. Federal Bank and M&M Financials within that space is looking at they could see a bounce. If Federal Bank holds the current low, it could see about 15 to 20% rise from current levels. So that's an important one to watch. And SBI, it's important for the stock to hold 445. I think that's likely to push the recovery, short-term recovery, I would say, for the banking index to somewhere close to 37, 38K.
Okay, well, Jay, before we let you go, what are the big plans for New Year's Eve out here in India? I'm sure you know by now that there are a lot of restrictions and clampdowns. So it's going to be a New Year's Eve at home for most of us. But how about you?
Yeah, the civil liberties are a little more higher here. So so even though if you call it clamp down, you are at liberty to go out, but you got to be sensible and then fortify yourself in a healthy in a health fashion. So wealth and the markets are giving you a gift. So we can make use of the our sensibility to fortify our wealth. So not much happening. There's a Omicron wave that's going on out here, and almost 1 in 10%. Out here has got it. In fact, my home has, three of us in the household have got it. I'm the only last man standing.
Oh. Okay, I know I went through a similar situation last time around. I mean, we're lucky that in this wave, at least the variant is mild. So perhaps it's easier to manage than the previous brutal wave. So wishing you a lot of health, wishing your entire family health. Hope they recover very soon. And until we speak again, have a safe, healthy and prosperous 2022. Ajay Bala, always a pleasure speaking with you on this show.
Thank you. Same to you.
Okay, well, with that, we wrap up another edition of Taking Stock. From Reema, myself and the entire team, wishing all our viewers a Happy New Year. And I wish for only one thing for all of you, that's health. Everything else comes secondary, right? Thanks so much for watching.
MCX IPF presents Simplifying Commodities, Futures, Options and Indices.
Commodities investing always gains interest when inflation becomes a concern. Since 1991, energy-related commodities and broad commodity indexes consistently exhibited the highest level of correlation with inflation of all commodities. Research shows that commodities tend to be one of the asset classes that is most positively correlated with inflation as calculated by the Consumer Price Index, which incorporates commodity prices like crude oil, natural gas and agricultural commodities. The US Consumer Price Index rose at the fastest pace since 1982. Meanwhile, Eurozone inflation climbed to a record. India wholesale inflation hit 12-year highs. More than 3/4 of countries analyzed by the Pew Research had higher inflation in third quarter of 2021 versus that of 2019. Commodities also tend to be uncorrelated with stock markets, which could add a diversification benefit to your portfolio. The spot price of a particular commodity reflects the current price for immediate delivery of that commodity. And while that's a great news for stakeholders, they may not be of immediate relevance to investors. Investors can't simply buy and hold most commodities. So the most common way to invest in futures is through options and index contracts. These contracts lock in at a price which you can buy or sell the underlying commodity at a specified future date. Over the last 3 decades, commodities have had a statistically significant and largely consistent positive inflation beta, or predicted reaction to a unit of inflation. Using commodities to hedge inflation and diversify equity exposure is akin to investing in a high premium insurance policy. Commodity prices often go up in a period of inflation, so holding them allows investors to benefit from the demand of these assets. Making an allocation to commodities really is about being diversified. A research at Vanguard Quantitative Equity Group found that over the last decade, commodity inflation beta has fluctuated largely between 7 and 9. This suggests that 1% rise in expected inflation would produce a 7 to 9% rise in commodities, suggesting that commodities inflation hedging power has been strong and consistent.